Cathie Wood, the founder and CEO of ARK Investment Management, offered some insights into her investing strategies, including her recent moves with Tesla and Chinese stocks, and predicted what will be the next big thing to shake up markets. We're going to figure out why Tesla stock is set to continue in an upward trajectory. Just sit tight and stay tuned. Everyone probably knows by now that Cathie Wood shot to prominence in 2020 thanks to her blockbuster performance driven by bets on mega growth stocks. Her exchange-traded funds in that year have delivered eye-popping returns, with her flagship ETF up more than 150% in 2020. Are you still wondering why Cathie Wood is such an important figure when it comes to stock trading, in particular Tesla stock? Wood has built such a large following that an announcement about a new ARK fund moved markets. Her podcast has landed big-name guests such as Elon Musk. She's indeed become a favorite of the Wall Street bets crowd. During an appearance at the Milken Institute's 2021 Global Conference in California, Wood offered perspectives on a broad array of topics. Wood's known for her bullish stance on Tesla stock and has never wavered in that regard, even during the electric car maker's early days. She reiterated her $3,000 base case price target for Tesla by 2025. That's a target that Wood first revealed in March of 2021. Well, this comes after Wood's ARK investment sold some Tesla shares in September 2021. So that leaves us wondering why she still maintains her bullish perspective, yet she is selling. In the past, Wood has said ARK likes to trade around Tesla's outsized volatility, taking advantage of low prices to buy and selling when she feels prices could take a hit. So does that mean that Cathie Wood is anticipating a hit on Tesla stock? Despite the recent sales, Tesla still makes up nearly 11% of ARK's flagship fund, which holds about 3.1 million shares worth a staggering $2.3 billion. And just to maybe make investors a little bit more calm, ARK has also sold chip makers NVIDIA and NXP Semiconductors while picking up stock in software firm UiPath, real estate website Zillow, and e-commerce companies Etsy and JD.com. So probably the company was looking to diversify their portfolio. If anything, ARK Invest still expects Tesla's share price to reach the $3,000 mark by 2025. ARK expects Tesla's market capitalization to reach as high as $4 trillion in the best-case scenario. ARK Invest also increased the probability of the electric car maker achieving fully autonomous driving within 5 years, and said the company's net autonomous ride-hail revenue could be as much as $327 billion by 2025. It expects Tesla electric vehicle revenue to reach between $234 billion and $367 billion by 2025. In January 2020, ARK predicted that Tesla stock will be 10x to $7,000 and $1,400 per share after the 5-to-1 split by 2024. The price target was the highest among all financial firms that follow Tesla. At the time, most thought ARK's predictions were laughable. However, at its highest, Tesla's stock 9x'd its price since ARK released their report. Currently, Tesla stock has given up some of its gains after Elon Musk started selling 10% of his Tesla stock in order to pay tax. In March 2021, ARK Invest published the firm's latest Tesla prediction. In their model, ARK said Tesla will produce 5 to 10 million vehicles a year by 2025 and could be worth $3 trillion. This is by far the most optimistic price prediction among all analysts following Tesla. However, Cathie Wood now says those predictions might have been too conservative. In a new Barron's interview, Cathie Wood says after looking at Tesla's progress with the full driving beta program, she believes Tesla might be able to garner a 20 to 25% share of the entire automotive market in the next 5 years. Worldwide, around 80 million vehicles are sold every year. With a 20 to 25% share, this would mean Tesla could sell around 20 million vehicles a year by 2025. For comparison, Tesla sold 500,000 vehicles in 2020, and the 2021 deliveries are expected to hit a massive 900,000 deliveries. Cathie Wood defends her prediction by pointing out Tesla already has a 60% share of the electric vehicle market in the U.S. and a 20% share worldwide. In her firm's earlier analysis, ARK expected Tesla EV market share to fall as new electric vehicles are introduced to the market. However, to ARK's surprise, Tesla's share of worldwide EV sales, rather than decreasing, is keeping steady or growing. This has given ARK confidence to be even more bullish on Tesla. The second and perhaps the most important reason for Cathie Wood's optimism is Tesla's progress in full self-driving. In the interview, Wood points out that Tesla leads in FSD computer hardware and the progress she has seen in the FSD beta program. Wood says if Tesla achieves full self-driving ahead of all competition, this is going to give the EV maker an insurmountable edge that it could leverage to get a larger share of the worldwide automotive market. Currently, the two largest automakers in the world are Volkswagen and Toyota. Both companies have several brands contained under a big umbrella and produce around 10 million vehicles a year. This means that if Woods is right, Tesla will take the entire market share of the German and Japanese giants. Woods' prediction is certainly exciting for Tesla fans and investors. However, Tesla's official plan is to hit 20 million vehicles a year by 2030. Well, we'll be sure to keep you posted if Tesla announces a change in plan. Cathie Wood maintains the $3,000 price target despite the stock's recent meltdown and her decision to offload some of her shares. Demand for China is the linchpin. As capacity builds in Berlin and Austin, that's what will probably send Tesla's stock to $3,000. 40% of Tesla's deliveries in 2022 will be derived from the lucrative China market. And two, the supply chain issues that have plagued automakers this year will abate in 2022. In turn, Tesla stands to surprise the street by delivering close to 1.5 million units by year-end. The return to a focus on Tesla's fundamentals would be welcome news for the automaker's bulls. Tesla's shares came under pressure in December as CEO Elon Musk sold down his stake in the company to meet tax obligations. Musk has sold roughly 15.6 million shares for a shade over $16 billion, bringing him close to unloading 10% of his stake in the company as planned. All in, with considerable volume, cost, and operating leverage momentum, we continue to see large upside in 2022 consensus expectations, depending on the execution of new factories ramp-up and supply chain bottlenecks. Mid-term, we believe Tesla's impressive trajectory for its battery technology, capacity, and especially cost will continue to accelerate the world's shift to electric vehicles and extend Tesla's lead considerably. It should also enable Tesla to keep expanding its operating margins, likely exceeding 20% over the next few years, representing very best-in-class performance. Others are more skeptical. Awanda analyst Ed Moya says Woods and other Super Bull price projections are overhyped. He adds that they might soon be curbed since U.S. Senator Joe Manchin recently rejected President Joe Biden's Build Back Better plan to boost green energy adoption, delaying and/or potentially killing the legislation. Moya says Tesla could be due for another pullback before bouncing back, and that even if it does, he doesn't expect its shares will surpass $1,200 next year. In fact, he has a target of $1,100. Moya also threw cold water on Tesla's autonomous or full self-driving service, which he doesn't think will be fully available as quickly or successfully as some envision. Despite the challenges, Wedbush analyst Dan Ives says he remains steadfastly bullish on Tesla, adding that its recent drop is a golden buying opportunity. With a $1,400 price target, he sees Tesla clinching 50% of the $5 trillion global EV software market by 2031. Much of it from growing China deliveries. So what do you think? Is Wood's prediction too optimistic? Do you think Tesla has a chance of hitting 20 million vehicles a year by 2025? Let us know what you think via the comments section. Remember to like, share, and subscribe. Stay safe, and we'll see you next time.